Welcome. In this video, we will analyze whether it is time to buy for Zbcn coin. Don't forget to subscribe and like, and please watch to the end to understand. When we look at the chart from a broad perspective, it's quite clear that there has been a long-standing upward trend line. This rising trend line represents a critical support level where the price has touched multiple times, and with each touch, has received a strong reaction, moving upwards. So far, the price has pulled back to this trend line several times, and each time, bulls have stepped in, initiating a strong upward wave. This shows us that investors are closely monitoring this level, and when the price approaches this point, they respond with buying actions. Currently, it appears that the price is pulling back towards this trend line once again. This pullback could create an opportunity for new buyers to enter the market. Historical data shows that whenever the price approached this trend line, it received strong buying reactions and started a new upward wave. If the same scenario plays out again, a new rise from this region would be a strong signal confirming the continuation of the trend. These kinds of upward trend lines provide important clues about the overall market direction. If the price can maintain this line, we can confidently say that the bullish trend is continuing. Therefore, it's crucial to monitor how the price reacts when it reaches this level. If strong buyers step in and initiate an upward move, it will be a positive development, showing that the bullish momentum is still intact. Looking at the reactions after touches on the trend line, we consistently see strong buying pressure, causing the price to make upward leaps. This suggests that this area is a psychologically and technically significant support point for buyers. Since investors are closely watching this level, a significant market movement could occur if the price reaches it. On the other hand, maintaining this rising trend line is also crucial for the overall health of the market. As long as this trend line, which has been acting as support for a long time, is not broken, the upward trend will likely remain strong. If the price reacts upward from this level, we could see the trend continuing in an upward direction, consistent with previous price movements. However, if the price breaks below this level, a short-term correction could occur. But this doesn't mean the trend is entirely broken. What matters is whether the price stays above this trend line and the strength of the reactions from this point. If the price finds support here and begins to move upward strongly, it will indicate that the bull market is still active and the trend is continuing. Especially with large volume buying, the price is likely to regain upward momentum. This could signal the beginning of a strong bullish wave in the market. Therefore, tracking how the price reacts at this level and the buying pressure that follows is of critical importance. As long as the trend line is not broken, the upward momentum will remain dominant. In Elliott wave theory, the current price action is at a critical point. The first wave has clearly been completed, and the market is now progressing through the second wave correction. This second wave is typically a period where investors take profits, and the market experiences a pullback. However, the size and shape of the second wave will determine the overall structure of the market and how future price movements will unfold. Particularly, this correction could lay a solid foundation for the strong initiation of the third wave. However, there's a critical situation here. If the price falls below the starting point of the first wave during the second wave, it would invalidate the Elliott wave structure, and a new method of analysis might be required. This situation could cause the trend to reverse in the market, potentially leading to lower price levels. Therefore, the depth of the second wave and when it will reverse is very important. If the price does not drop below this level and gains upward momentum from its current position, it would allow the current wave structure to remain intact and make the transition to the third wave possible. If the second wave holds at key support levels and rises, it would be a strong signal for the start of the third wave. In Elliott wave theory, the third wave is typically considered the most powerful and longest wave, because investors often begin making significant purchases when they believe the market is starting to recover. During this phase, the market gains momentum and prices move rapidly upward. When the third wave is associated with Fibonacci levels, it typically extends to the 1.618 Fibonacci extension level. This indicates that price movements are transitioning into a strong rally. In Elliott wave theory, the first wave generally provides a significant initial move, followed by a pullback in the second wave as a correction. However, when the third wave begins, this correction often turns into a slow recovery process and leads to larger, sharper increases. Therefore, the target for the third wave is quite clear, and it is generally expected that prices will rise to at least the 1.618 Fibonacci extension level. This means the market could reach much higher levels than where it started. For investors, This process presents a major opportunity. If the price begins a strong upward move without breaking the current levels, it would indicate a very strong buying opportunity. Once the third wave starts, much higher price levels could potentially be seen. Investors should particularly pay attention to the level at which the third wave begins after the correction process of the second wave, as this level might signal that prices will rise rapidly. Additionally, another important point for investors is to monitor the current price levels and whether they are being supported. If the price reaches the end of the second wave and starts transitioning into the third wave, it would indicate the beginning of a strong upward trend. At this point, an increase in volume buying is expected, and as the market gains momentum, prices could quickly climb towards significant Fibonacci levels. During this process, especially if the price does not fall below the starting point of the second wave before transitioning to the third wave, it would be a healthy development for the market. This would allow the current wave structure to remain valid, and with the start of the third wave, a major rally would become possible. Additionally, another key factor for investors to watch is how the market reacts before the third wave begins. If the market recovers healthily and prices start climbing to higher levels, it would signal that the third wave is likely to begin very strongly. The rising trend seen on the RSI indicator is actually one of the key signals to pay attention to. This trend shows that market participants tend to make strong purchases at a certain level, and with each touch of the RSI, prices have been rising again with upward reactions. Although RSI is a momentum indicator used to determine whether an asset is overbought or oversold, it is also very effective in evaluating the strength and direction of a trend. The fact that RSI is in an upward trend suggests that the positive momentum in the market is strengthening, and this indicates that buyers continue to dominate the market. Each time the price approaches the rising trend line of the RSI, it has historically reacted and made upward jumps, just like before. This shows that a strong buying pressure is triggered when the price touches this support level. If the RSI approaches this trend line once again and makes an upward bounce, it could mean that the market's bullish momentum might accelerate, and buyers may regain more control over the market. By looking at past bounces at these levels, investors can see that each of these reactions triggered previous rallies, which can be a significant indicator for predicting potential upward movements. This close connection to the rising RSI trend emphasizes the continuity of buying pressure in the market. If the RSI touches these levels again and the price starts moving upward rapidly, this could not only signal a short-term rally, but also potentially lay the foundation for a bullish trend in the medium and long term. Investors can carefully monitor each approach of the RSI to this trend line, and by timing their buys correctly, can seize long-term profit opportunities. Additionally, each bounce off the rising RSI trend line is technically significant for investors. This kind of momentum increases market confidence and may lead to a rise in trading volume. By analyzing the reactions of RSI at certain levels, investors can make more accurate predictions about the direction the market will move in. This behavior allows investors to better understand market sentiment and the overall mood of the market. In conclusion, each time the RSI touches the rising trend line, and as seen previously, upward movements may occur, which could be an important indication for the continuation of the rally. If the RSI approaches this trend line again and makes an upward bounce, it could mean that the buying power in the market remains strong, and further price increases may be seen in the coming days. As long as this trend line is not broken, the price will continue to move upward. Yes, friends, this is how it happened in this video. Don't forget to subscribe and like. See you in the next videos.